Good afternoon. Thank you for inviting us to present our company results today. My name is Danielle Wren, and I have been working with Sean Churchill and Jonathan Wanger. Together, we are the owners of Firm Strategy working in the alligator industry. Our firm performance over the last 8 periods has been nothing short of spectacular. As of the last closing day, our stock price index was $5,079, roughly 5 times higher than our nearest competitor in the market. We have a 77% volume market share and a 75% value market share. This equates to 3 times the value share of all of our competitors combined. Our 8 period cumulative net contribution is $492 million. Our last period alone had a net contribution of $147 million compared to the closest competitor in the market at just $7 million. The alligator industry total market consists of 16 different brands divided among 5 different segments. Our 5 brands, Soft, Solo, Solo 2, So Pro, and So High, are ranked numbers 1 through 5 in market value share. Our products focus on covering 4 of the 5 customer segments. Period 8 brand performance for each of our brands is shown here. Our top performer, Soft, is the number 1 brand in the industry with sales last period of $139,000. This represents an almost 23% value market share and a 31.5% volume market share. Soft also has industry-leading brand awareness of 70%. Soft and Solo were our original brands which were repositioned with an R&D project in period 1. Solo is currently the number 4 brand in the industry in terms of overall value share at 9.7%. Last period, Solo accounted for $59,000 in retail sales. Solo currently has the second greatest industry awareness of 66%. With changing customer desires, Solo began dropping in sales and a new R&D project was initiated in period 6. This resulted in the launch of Solo 2 for period 7. Solo was kept on as a brand to help cover this expanding segment. Solo 2 was launched in period 7 and rapidly grew to the second largest brand in the industry with an overall market value share of 18.5% and period 8 sales of $112,000. Our third product to launch, So Pro, was introduced in period 3. Currently, So Pro is the number 3 brand in the industry with an overall value sales of 14.5% and last period sales of $88,000. Our last product, So High, was introduced in period 4 and is the number 5 brand in the industry with $57,000 in sales and an overall value share of 9.4%. Breaking down our products by segment, you will see that we have the number 1 product in each segment. Solo is the number 1 brand in the Savers segment with a market share of 75%. For the Shoppers segment, we have 2 brands, Solo and the recently introduced Solo 2. Solo 2 is the number 1 brand in this segment with a 53% market share, and Solo is the number 2 brand in this segment with an almost 27% market share. Combined, we have a dominant position of over 80% market share in the shopper segment. The professional segment is covered with our So Pro brand, which has a 76.5% market share. So Pro is also the number 2 product in the Explorer segment with an 8% market share. Our high earner segment brand is So High with a 68% market share. So High is also the number 3 product in the Explorer segment with a 6% market share. Our main keys to success involved immediately performing R&D products on our initial 2 brands, Soft and Solo. These brands were moderately different from what savers and shoppers were wanted. In period 1, we chose to initiate an R&D program on both brands to immediately orient them closer to what the public wanted. This was followed up the next 2 periods with projects for the professionals and high earners. These projects were initiated 1 per week, and we utilized the success of the Soft and Solo brands to help finance the R&D projects. One other key to success was to closely monitor the 5-year projections. Each week we noted the Explorer segment having future negative growth and thus chose not to invest in developing a product focused on that segment. Instead, SoPro and SoHi managed to obtain significant market share in this shrinking segment without the need to actually have a specific brand for the Explorers. Once we had four products running, we began increasing our advertising and commercial team to not only sell more product, but to work as a barrier to other brands entering each segment. By period 6, it was noted that Solo and So High were moderately off from their consumers' optimal product, so two new R&D projects were started. Given the size of the shoppers market, we introduced a second product to that market, Solo 2, and maintained Solo to help capture a larger market share. For the high earners, we modified the previous So High brand and kept the product name to capitalize on brand awareness. With those newly released, we once again focused all our capital on increasing our advertising and commercial team. There were several changes we would make. Our initial decisions for period 1 had an error in the data input, which resulted in a loss of 10% industry market share. Following this, our team members would double check ourselves to verify no further data errors occurred. Poor production level management caused us not only to have leftover inventory, but at times lost sales. Only our last period, period 8, were we perfect on production, such that no inventory remained and no lost sales occurred for any of our 5 brands. We achieved this by more closely using the marketing forecast and putting in more accurate and detailed predictions based upon all the brand, segment, and market forecast data available. When reviewing our results, we also noted a period of flat growth from period 5 to period 6. This period saw just 4% growth and was due to us continuing to manage existing products that were no longer properly aligned with customer desires. In retrospect, we should have initiated the R&D projects on Solo and So High one period earlier. Lastly, rather than try and do advertising of a given brand in several different segments, we would focus all advertising on their particular segment. We did not see any gain in multi-segment advertising for a given brand. Putting all these changes together would result in no 10% downturn for period 1, no leveling off between period 5 and 6, and ultimately this could have resulted in a 30% growth rate period on period, which would have our stock price index at $6,500 rather than just over $5,000. Determining the segments with the highest growth rates and largest size proved to be the key to success. Since period 0 in the alligator industry, savers and shoppers were two of the larger size segments and were most attractive in terms of future growth. By period 8, savers and shoppers made a whopping 78% of the total market. Our number one goal was to dominate these two segments, which was successful and accounted for a large portion of our revenue. To predict the segment growth rates and sizes every period, the firm invested in market forecast reports which broke down the market intelligence for each segment. This investment proved to be extremely beneficial to our overall success because we could accurately predict the market 5 periods in advance. Our customers' ideal values dictated which brand the firm would use to target a specific segment. The firm's two original products, Soft and Solo, were most aligned with the saver and shopper segments, respectively. Therefore, the firm targeted these segments with Soft and Solo. The decision was made to focus on one segment per brand and not try to compete in multiple segments, allowing the firm to target each segment with 100% of available resources. An important decision that was made was to not target the Explorer segment. This was due to a couple of reasons. First, the firm did not have an existing brand that would meet the needs of the Explorers. The Explorer market was already in decline in period 0, and because of this, it was determined that the capital expenditure to create a product for this segment was not worth it. In the long run, this decision proved to be smart, as the Explorer market shrunk to 4% by period 8. The important lesson was that the firm did not need to try and be a player in every segment. There was an intense focus by our firm to have products in our portfolio that met customers' desired specifications. In the early periods, we initiated R&D projects on our original brands, Soft and Solo, to perfectly align them with customers' ideal values. After this was completed, new products were launched to compete in the professional and high earner segments. These new products were created to be exactly in line with customers' ideal values, investing in R&D early on and often proved to be very effective. R&D projects were executed in 4 out of 8 periods and on 6 products. All members of the firm would agree that even more R&D projects would have been beneficial. Customers' ideal values change over time. The firm successfully predicted these changes by investing in and analyzing market research studies. Every period, the same information was purchased, including semantic scales, multidimensional scaling, and conjoint analysis. All three of these studies shed light on the importance of certain characteristics to customers in each segment. The information was then used to make decisions on initiating R&D projects to realign products to customers' changing ideal values. Our firm had a big focus on price throughout the simulation. We quickly learned that having accurate price was going to be a major key to our success. The price of our products was determined week over week by looking at what our targeted segments for each product were willing to pay for the key attributes our products had to offer. Our firm realized that having proper pricing was key to stealing market share from our competitors. There are several ways shoppers consume products, whether it be shopping at mass merchants, specialty stores, or from the comforts of online shopping. Having our product in the correct places was a major key. It took us a few weeks to get our product placement just right, but once we shifted our focus to placing our products where the targeted segment shops, we began to dominate our industry. Each week, our firm had a big decision to make when it came to promoting our products. We learned that the trick was to find the right balance between advertising and research and development spend week over week. Our firm took advantage of the fact that we had the highest budget in our industry for the last few weeks of the simulation. We advertised and spent wisely on research and development. Having accurate commercial team member distribution also played a part in our firm's success.